To get this video started early because I am vibrating with excitement. We are seeing things happen as you and I have discussed over the last 6 months. They are starting to break the way we have discussed. Let's get into it. Let me know what you think. And again, I believe we have talked about most of these things over the last 6 months. First, we can talk about home builders. Home builders in general. A lot of folks have been thinking the home builders in the current interest rate and housing market would go bust. There's a lot of doom and gloom about home builders, but like we have discussed, home builders will dominate in this market. We are seeing interest rate sensitivity in the existing home market. Thus, home builders can both slow down and gain market share. In California, for example, perhaps one of the hardest hit markets in the current housing market, Southern California home builders are growing market share. 4,944 homes were sold in February. That is down 24% year on year. However, existing homes are down 45%. Folks, when you hear people talk about a single scary statistic, you need to question them. There is always more than one point. The housing market is a lot more complex. I know there are some content creators that produce gorgeous charts, but they always tell incomplete information and they create content for an algorithm to get paid. These content creators are out to make money on you. Please have some intellectual curiosity and look for the next point. So again, new home sales down 24%, existing home sales down 45%. The market share for home builders in Southern California has gone up to 11.2%. Builders have flexibility. What does that mean? First off, what are we hurting for today? Supply. Home builders produce and can fill that need. And again, as transactions come down, the marginal buyer is better prepared to handle a new home. So again, also, builders have multiple levers to pull. They can lower the price, sure. They can give credits for upgrades, sure. They can also do rate buy downs and in some cases do all three. So again, as I've shared with you repeatedly, home builders are going to do great this year. They may build less, but it would not shock me if they're actually more profitable. Think about that for a little bit. Again, supply in the spring selling season, lots of great data. Altos Research, Mike Simmons at Altos Research, a great follow on Twitter. Only 410,000 single-family homes on the market, down nearly 1%. But remember, what is my thesis about active listings today? Hopefully you know by now. This 410 number is the entire market of single-family homes. That means a $200,000 house is counted the same as a $25 million property on the coast. It is my belief that this 410,000, while above last year numerically, is worse. We are seeing luxury inventory stack up. We are seeing move-up stuff stack up. Entry level has never been hotter. I am here to tell you that I believe the entry-level first-time homebuyer home is hotter today than last year. Think about that for a moment. Now, that might not be the case in every market, but if you were to talk nationally like I do, I believe that is a true statement. So again, of the 410,000 single-family homes down 1%, I believe it's probably more like 320, 315 if you take out luxury and wish pricing, which still exists in the marketplace today. There were only 66,000 new listings last week. And you want to know how hot the market is? 16,000 are in contract already. Pretty wild to think about. Pretty wild. Let's talk about CoreLogic. CoreLogic came out today and talked about home prices. Remember Case-Shiller? Case-Shiller just reported January. CoreLogic is a little bit better. Now they are reporting February. Now, I know it's April 4th and we're looking at February data, but when you look at the housing market and you have these yearly statistics, this is important. CoreLogic for the month of February, year on year, up 4.4%. CoreLogic does not show a negative year on year. If you follow me back in January, you know that I believe we will have 4 months of negative year on year numbers because of the nonsense from 2022. But we will be up when it comes to December. CoreLogic, again, not only up 4.4% year on year, but up 0.8% month on month. I know a lot of channels out there like to talk about month on month because it feeds their narrative. Well, it is what it is. CoreLogic does highlight of the 50 states, 8 are negative year on year. But we do seem to have more demand than supply, and demand clearly picks up as rates fall. And I just checked the 10-year this morning. It is falling again, which means mortgage rates by the end of the day will likely fall as well. A lot of these things are going the way we thought, so let's get into some more. How about Manhattan? Manhattan, if you want to shop for luxury, remember, if you are lucky enough to be in a position to shop for luxury properties like Patrick Bet David, go write disrespectful offers. Talking about disrespectful offers in today's market for first-time homebuyer homes is disingenuous. It's missing the mark. You are out of touch. But let's talk about Manhattan. Where is my data for Manhattan? Manhattan real estate sales, aka transactions, plunge 38%. However, cash transactions hit a record. Cash transactions in Manhattan were 57% of total transactions. That is wild. 57% of all transactions closed last month were cash. I think about that and go, what does that mean? Does that mean the wealthy are getting money out of stocks, getting out of banks, putting in I don't know. Let me know what you think. What do you think it means that Manhattan, one of the top 3 most expensive cities, saw a month where cash transactions were 57%? I don't know what that means. Leave your comments below. I think it is worth a discussion. I would love to hear what you guys have to say. Job openings. We just got the JOLTS report, which came out this morning, and it is a doozy. It has to make Jerome Powell smile. Jerome Powell wants to slow down the job market. The JOLTS report is yet another sign it is working. We went from roughly 10.5 million job openings to sub 10 million. We are at 9.9 million, I believe. Again, down over 500,000 jobs in 1 month. Yes, folks, the economy is slowing down. I think it is slowing down much faster because of the banking crisis, tighter credit. I do still believe we get one more Fed rate increase on May 3rd, then we're done. This market is behaving like you and I have discussed the last 6 months, and I feel good that you and I are ahead of the game. How about James Bullard? Well, I told you that a lot of Fed talks this week. I think there were 9. They are all going to talk tough. They don't want the market to get ahead of them. James Bullard, market is wrong about price cuts. I happen to agree. There is an 80 to 85 chance the banking crisis is behind us. I hope so. We will see continued low growth, and again, put that in context, sub 1%, and a strong labor market. I believe both of those are incorrect. I believe we will have a recession that is ultimately called starting Q2, yes, this month, through the end of the year. In fact, I believe if you look at the dot plot and you look behind the scenes, you would say the Fed is also calling for a recession. How about Virgin Orbit? Well, it is official. Virgin Orbit has filed for bankruptcy. They failed to raise $200 million. You and I have talked about this for 10 days or so. It is not about Virgin Orbit. It is about all the other zombie companies who lived on cheap debt, who have business models that don't work, going bust. Virgin Orbit is the first of many. We're potentially talking thousands of bankruptcies. Now, all bankruptcies won't be the same. Some will reorganize their debt. Some will just lay everybody off like Virgin. But again, we are going to pay a steep price. You can't have a party where there's alcohol and drugs and all of that without a significant hangover. The cops have been called. The Fed is the cops. They are coming. If you happen to be over-leveraged or illiquid, you are in trouble. Much more Virgin orbits to come. Next, Jamie Dimon. Jamie Dimon, one of those guys that I read, right? Jamie Dimon, Warren Buffett. When there's an article that says their name, I generally will click it and read it. Jamie Dimon came out with his 43-page investor letter, excuse me, basically saying the banking crisis is not over. It will have repercussions for years to come. This is what you and I have talked about. This is not the Great Recession. This is not some epic crash moment that we just get to and we build out of. This is no V-shaped recovery. This will take years. Please research the S&L crisis from the 80s. We are seeing the same things happen. We are seeing money leave banks. Why? Because you can get better return elsewhere. It's the same thing. We saw a real estate crash. We saw Resolution Trust Corp. We are seeing the same things. Please do your own research. Look at the savings and loan crisis. McDonald's, I don't know if you saw this, but we are starting to see layoff notices out of big tech. McDonald's told their corporate employees to work from home for the next 3 days as they announce layoffs. That's got to make you nervous. When McDonald's is out talking about layoffs, you know more to come. Because you certainly can't look at McDonald's and think big tech. So we are seeing layoffs broaden out. How about Jason Calacanis? Hopefully I said that right. Part of the All In podcast, calls himself the greatest moderator. Well, he's back at it on Twitter. He sent out an all caps tweet yesterday saying the economy is effed. He didn't say effed. He said the other word. He came back saying the best thing you can do is start a company and control your own destiny. To which I say, kind of talking your own book, buddy, like you and I have talked about for at least 6 months. Take a breath. Assess where you are. If you don't have an emergency fund, build one. If you have crazy high credit card debts, pay them off. This is a time to choose your thing. If you are an entrepreneur like Jason Calacanis and his buddies, go start a company. If you are a stock wizard and it excites you, go do that. This is the time to go deep on your thing. My thing happens to be residential real estate. Go deep. That is what I talk about and teach. This is not a recession, is not a time to go wide. You cannot be a great real estate, a great stock, a great entrepreneur, and a great crypto investor in a recession. You will go nowhere. Pick your lane. Go deep. If we go from 3.6% unemployment to 7%, that still means 93% of you are employed. That will mean assets are on sale. That will mean terms can be had. Please, I implore you, take a breath. Realize that bad times never last. Realize that wealth is built in recessions. And then finally, pick your thing. If your thing happens to be residential real estate, I don't think there's a better way than how to get started one rental at a time. There's a link below. You can join the private Facebook group. If you just want to understand a buy box, there's a $47 course you can go play. Again, please, in a recession, choose your thing. If you want to make a difference, if you want to come out of this better, stronger financially, choose your thing. Okay? Understand. Next, Billionaire Barry. Of course, folks, I am talking about Barry Sternlick. This is a guy that goes on CNBC and whines and complains. Again, I think he's an illiquid billionaire who's having his empire collapse around him because he did not listen to Jerome Powell at Jackson Hole. But, you know, I think today I think Barry is right. I think we are in for, I think inflation will roll over faster because of rent. He actually put up I actually think it's funny. When billionaires produce slides, now let's be clear, Barry didn't produce that slide. Somebody in his team did. But still, when billionaires go to CNBC and bring PowerPoint, that's a sign of stress. But again, he brought up a great chart talking about actual rent versus the Fed. And if you remember, we have been talking about inflation rolling over the second part in late summer, early fall. Barry validated our opinion. Again, the easy inflation's done. The hard will start late summer, early fall. Then the really sticky gets going, which is the services piece. So again, very interesting to hear about. And then finally, I am pleased to announce we have added another millionaire to the One Rental at a Time family. She was on yesterday. Her name is Casey from Brick by Brick Wealth. She is a stay-at-home mom. Yes, folks, a stay-at-home mom. She had 2 kids when she started. She now has 3. She started doing a side hustle doing crafts to save up her $20,000 down payment on their first rental property. Again, you can do this. You need to sacrifice daily discipline and move forward. If you are a stay-at-home mom or know a stay-at-home mom or a single mom or single parent of any type, and you want to be inspired, go ahead and check out Casey's video from yesterday at 5 p.m. She has 2 more videos coming out, one today at 5 p.m., one tomorrow at 5 p.m. She is just another example of somebody who focused, knows her buy box. She actually uses the word buy box over and over again, and she just goes for it. You will hear in subsequent videos her talking about closing her 7th property inside her buy box, folks. Again, you can do this, but are you willing to do the work? That's all I got to ask. Are you willing to do the work? And then finally, Casey is going to be one of the 4 dynamic women talking to us at the upcoming, I think it's the April 16th event, April 16th. She will be talking. I think she's going from 10 to 11 o'clock. Sign up. Get your questions ready. We have 77 spots left. We opened it up for 100. We've sold 23 seats, only 77 seats left. I will put a link below shortly. There are links in yesterday's daily financial news. You must be at this. 4 dynamic women doing 4 amazing things. There's over, let me just add this up. There's probably 60 years of experience and multiple millions of dollars when you hear them. So again, come here, come talk to Anna, April, Casey, and Alicia. You will not be disappointed. 7 to 11 a.m., 4 hours, Sunday the 16th. Take care, and let's congratulate some people. Yes, folks, you guys are doing the work. I am so proud of you. Peter, congratulations for getting your deal. Peter, congratulations for your 2nd deal. Alex, congratulations. And Justin, congratulations, folks. Yes, One Rental at a Time works. There are great deals out there. We're heading into a recession. Good operators who do the work are going to win. The people that sit on the couch and do nothing, they're going to be renters forever. Just the way it works. If you want to do the work, again, let's remember, I'm not saying buy. I'm saying do the work. If you have a buy box, you look every day, you too can learn average. You too can avoid bad deals. And most importantly, you will close on great deals. And then I will send you one of these. And of course, if you don't know, we also do these golden tickets for the very first deal you close. You can only ever get one of these, but you can get as many as you want. Some people have gotten 10 or 15 of these, and I will keep mailing them out. All right, folks, take care of yourself. Have a wonderful day. Like, subscribe, comment. Share One Rental at a Time with your family and friends. We are different. We bring you multimillionaires every day. We do a daily show, all for you. Have fun. Take care. Bye-bye.